Appreciate you joining today's session. This is my second favorite topic to talk about. So we will go in a little more detail, maybe even bring up some charts if you guys would like as well. But we're going to go through the introduction to technical analysis, which is, naturally outside of the options world. But when we think about trading altogether and we think about options trading, oftentimes, if you are an options trader, you also fall in that technical analysis bucket, because it's numbers and the math and engineers tend to be here. So welcome, excited. If you don't know me, Jessica and Skip, I'm the Director of Education Product here at OptionsPlay. And my job is to make sure that education and product go hand in hand. We understand it. We want to be able to apply it, work with a lot of brokerage firms to do that. And of course, here at OptionsPlay. So nonetheless, before we get started, have to give you a quick disclaimer. Very likely that I'm going to bring up some real securities today, and know that it is purely for informational and educational purposes only, not a solicitation to buy or sell a security, not considered tax, legal, investment, planning advice. That is something personalized. Today is educational and informational purposes only. With that out of the way, let's go through what we're going to cover today. So first and foremost, we're going to go through the value of technical analysis, why we use it. Then I love to go into the principles that make up technical analysis. That's important to talk about because that goes through my personal process, which I like to call qualitative, quantitative, but it marries everything together and helps put the market puzzle together. So we'll spend some time on that to get in the right mindset. We'll talk about some option strategies, bring up the Greeks for just a brief moment because they go hand in hand. Talk about some price analysis and patterns, chart overlays, momentum indicators, and of course, save some time for some Q&A. Probably going to bring up a charting platform as well, depending on where time is. So you guys let me know. I've got the Q&A and the chat open, have the big screens today so I can make sure I follow everything. So please feel free to utilize that chat. Now, before we dive into the essence that is technical analysis, kind of relating it all to options. Whenever you are trading options, you tend to fall in one of these two categories. You can do both, or you might lean on one side or the other. Almost like when you're analyzing stocks, you lean fundamental or technical, but ideally, sometimes you lean in both. Someone says they're not seeing my screen. Does anybody want to confirm that they can see my screen? That would be great. Can see. Awesome. All right. So you're either seeking income or you're gaining directionally. And that's important to know when we bring in technical analysis, because when we're bringing in technical analysis, it's the next layer to our process. We spend a lot of time talking about your goals and your ideal outcome and understanding what strategies are and your optimal environment. So when you're seeking income, your optimal environment is high implied volatility because that makes premiums higher and we want to sell higher and buy lower, right? And then we're gaining directionally, so long calls, long puts, and debit spreads. You're speculating and you expect a sharp move and upwards if you're bullish and you're buying calls, or downwards if you're bearish. So all of that in mind, we want to analyze the market and a specific security, even relative to other things, to optimize our optimal environment and our directional value. So we'll take a look at that. But yes, we want long puts to increase in value, as in your premium goes up in value. That's what that means. Your ideal outcome is for the option to go up in value as much as possible. That happens when you buy, and you want it to go down as much as possible when you sell. So there we are. That's the ideal outcome for your option, not stuff. So let's talk about the Greeks very quickly. I'm sure you've seen this slide before. This is the most stolen slide from OptionsPlay, which I think is a good thing because that means we've done something right. But nonetheless, love to share it again. I like to talk about the Greeks. If you've attended my sessions, it's one of my favorite things to talk about, but I like to bring it into technical analysis because it pulls everything together. If you've never seen this before, you put calls on the left-hand side, puts on the right-hand side. When we have our introduction to how options work, we actually build this out to get all the way to the Greeks. So it just marries everything together. Delta just tells us our directional exposure. Theta tells us if time, so they're positive and negative. So theta will tell us if time is on our side or against us. Gamma tells us if we want a sharp directional move. And then omega if we are going to benefit from implied volatility. So that's what the plus and minuses mean. If you've attended that before, we're going to bring it all together. If you haven't, don't worry, that's not the preface of today's session. So certainly keep that in mind. All right, so let's go move forward and talk about the value of technical analysis. So one, it's the study of market data. We're going to recognize patterns in events. There's mathematical studies. That's what indicators are. Sometimes I like to go into the math of them because it gives me the why. We certainly don't have to do that, but if you want to, let me know. You assess investment behavior by identifying areas of supply and demand. I'm going to expand on that a little bit later, but it's the psychological aspect of the market. Where are a lot of buyers? Where are a lot of sellers? Where is the area of supply versus the area of demand? And then there is a whole psychological aspect that you can bring into that. That is absolutely wonderful to talk about. And then all of that together is with the intent to analyze future prices. So we want to decipher and figure out where that stock is going to go. And we're going to utilize data, patterns, and events, the psychology that comes with investment behavior like fear and greed to figure out where the stock's going. That's the value of it. Now, here are the basic assumptions of technical analysis. If you have ever studied technical analysis, it should always start with this, because this gets your head in the right space, but it also is that foundational element that all indicators are really surrounded by. First and foremost is the markets are forward-looking. That is price efficiency theories, right? So the market discounts everything and it prices the new information as it comes to light. That means as a jobs report comes out, we're expecting that tomorrow. That's new information. And if that jobs report is what the market's looking for, it's going to react accordingly. So the thought of technical analysis with the markets are forward-looking is you're not relying on those fundamental or economic indicators of some sort. It is already pricing efficiently and adjust accordingly when new information emerges. That's exactly what that means. Earnings is another great example. When earnings come out, then the price automatically adjusts to the future expectation that we think that stock's going to be, because the market is always looking from 6 months from now, what is Apple worth from now? What is the S&P 500 worth from now? Based on all of this other information that we can pull together. It's important to know when big economic events are, or earnings. Those tend to be catalysts that can move the broader market or that underlying security, but that's because the markets are forward-looking, and that's the important component and thought process behind that. Prices tend to move in trends. They're observable. So it's like Newton's law, right? A trend in motion or an object in motion remains in motion. Same thing, trend in motion remains in motion until something gives us indication otherwise, is essentially what that means. That is speaking to the discipline of technical analysis. A lot of times, and that psychological aspect comes in here as well, but your trend is your friend. You might have heard that saying before. We're going to assume that regardless of personal thoughts or other things, that unless data suggests otherwise, if it's in an uptrend, it's in an uptrend. And it doesn't break that uptrend until it stops making higher lows and higher highs. As soon as that's broken, then that's give us indication, or it's an observation to change our view. And it's not just one thing. We want various things. Others are signals that require additional investigation. Other things tell us momentum, and others are literally indication of trend. And that's what we'll focus on and go through today. And then the last, certainly not least, is history often repeats itself. Patterns and signals, that's what this is the study of. We expect repetition. There sometimes isn't always act like identical as history repeats itself, but there's a rhyme or there's an echo. Even right now in the market, there's, with the inflationary environment, taking it from just the pattern cycle of it, so many technicians or analysts are trying to point to a place in time where we're in this certain type of market environment. From a technical perspective, or mathematical, looking for like the R squared piece of it, but that's something that's a little more difficult to do, and a tangent and a fun place we can go, but meaning that we're always studying where this has been before to understand the type of forward reaction that we will have because of all of these things. So that's the basic assumptions of everything within technical analysis that's important to just understand, get a foundational view on before we move forward into the fun stuff, as in how to actually apply this. All right, so just want to make sure that we've got the trades that are applicable for the way that we feel about securities before we dive into this. So when we're on this session, I'm assuming you know most of these option strategies. If you don't, we're going to cover them in a couple fewer sessions, or we've got a lot more of educational content we can provide you. But technical analysis is going to be a great way for us to decipher support and resistance and a stopping and starting point for security. And if it's in an upwards or a downwards trend, or even if there's a shift, I want to spot that. And I'll let you can go through that today. So there are different types of strategies that you can deploy based on the way that you feel about the security. That's the beauty of options. So to generate profit off of technical analysis, we have to implement a trade. Could be utilizing stock, but this is OptionsPlay, so we'll talk about options. It goes back to that Greek slide we had earlier. If we have a directional movement, we expect a sharp movement. That's normally when we're buying or selling. So that's where that directional is coming from. The magnitude of it, though, is where we want to see our starting and our stopping points. And that's what we're going to focus on next to understand. So, and we also look at the risk and reward and probability of profit, which is what we do on OptionsPlay to give you a good view of that once you put in the strategy. But I want to make sure that you keep the strategies in mind that you can deploy when we are utilizing technical analysis to really amplify our process. And we'll go through that probably again. All right, so start with support and resistance. This one is super easy and very visible to see, but it's essentially just buyers and sellers, right? Areas of supply and demand is the way that I've always learned support and resistance. So the support line is an area of demand. So right here, you can see as this stock continued to decline, this was an area of demand where buyers overpowered sellers and sent the stock right back up. This place where it found resistance turns into supply. There's a lot of stock that's here. That's the supply aspect and the psychological aspect, right? Where sellers come in and they overpower the buyers. And this constant flip of more buyers and sellers, or more sellers than buyers, is what creates this support and resistance. Now, this one is a trading range where it's very equal, mostly, where the support and resistance lines are. But what I want you to notice is when we are thinking about trend, is I'm not looking at something going up or down. I'm looking at the lows and the highs. So this is an equal low and this is an equal high. Therefore, it's sideways trading range. What's important to know when you see a trading range is, according to the Dow theory, there is always a period of consolidation before a trend reversal. So normally when you see this, there's some price normalization happening, which makes perfect sense if you think about the math of it all. And we can marry this with other indicators that will even show that. But to keep this in mind, and what I would watch for, even a great example, when the S&P 500 a couple earnings seasons ago, and we'll pull up some charts and go over this, but what I would be looking for in this, and something that I see misinterpreted with this basic support and resistance, is that concept of the lows and the highs. Meaning, I may see this is a low, but it could begin making higher lows and higher lows, but consistent highs. That's not a trading range, that is a direction. And if you think about the supply and demand aspect of it, that means demand, this line, would be rising. And eventually, demand is going to have the opportunity to overpower supply. So if this, it's not happening in this example, but if I were to see, and the inverse is also true, this uptick of where the support is, the area of demand, then that is definitely indicating a reversal is coming of some sort. You want to marry that with other indicators, though. Never rely on one. Support and resistances are wonderful because of the psychological aspect of it, because it's literally buyers over sellers, sellers over buyers. I'm going to say that 100 times. But then you want to add momentum, you want to add standard deviations, you want to add EMAs and SMAs, and I'll show you, walk you through how to do that. But this is the basics of technical analysis, is these areas of support and resistance, which in other words are areas of supply and demand. The more times that the stock hits and test, like example, this resistance zone, the stronger it becomes. Very logic. Same with the support. The more times it hits these areas, then the stronger it becomes. And also from the book, or from Carter Worth, I love the way he says this. These areas of supply and demand, they're like mattresses, meaning it's not an exact straight line. We draw a line there because that gives us our area, but it's a zone. So oftentimes you draw it from the top here, or when it fails to make a higher high, and then that becomes the zone, and the same with the bottom side. Also, it's a very different picture depending on your time frame. We didn't go over candlestick charts, what those mean, and looking at different time frames, but smaller time frames with this same type of view has less strength than a longer time frame. And we'll put those two together. But if you ever watch my market analysis, you know that I use weekly charts quite a bit. And that's just part of my personal preference. I put in daily as well, but I rarely go deeper than that because I'm not day trading or looking for direction in that purpose. But you can, but know that it's a different picture with a different time frame. And we'll pull up charts and go through that. As far as application though, so if we think about that time frame now, if we have a clear direction, this is where I've got multiple tests. Oops, we went sensitive mouse again. We have multiple tests here. It's a great time to buy a call. We're going to verify that with some other indicators, but we know it's going to go here. So perhaps that's now our debit spread. That's where I'd sell my short call. So I'd buy my call, it'd be at the money at 40. We'd sell our short call at about 48. That gives you your clear, definitive stopping point for the stock. That's how I would do that. Because buying a call, we know that it has unlimited gain potential, right? But it has a higher cost. So to reduce that cost, you have the give and take is I am capping my gain potential. In this case, it'd be around 48. But I would feel comfortable doing that because it's been tested. I don't think it'd go beyond this and stay within that trading range. So that's a practical way that I would apply trading options off of this. And you can do it literally on the downside too. As soon as it hits there, okay, I see it, it's formed some consolidation. It's, as these candles here, it's testing its resistance. It's not breaching. It's about to go back down. Let's buy a put and then sell a put at a lower price to reduce the cost of that. And you keep doing this until it is no longer in motion. So trend in motion, always in motion, unless otherwise indicated. So hopefully that makes sense. Very simple with support and resistance, but it is the foundation of literally everything else. Any questions on that? Is that crystal clear? Let's do put a 1 in the chat. All right. Great. And Dan, I see your question. I will absolutely show you how to do that. All right. So talk about breakouts and breakdowns. Very simple. Again, breakout means that I have overcome this area of resistance, this area of supply. And when it is an area of supply and it has been overcome, that means demand is higher than supply. So now it becomes an area of demand, which is another way of saying old resistance, new support. There we go. That is now what we have is a new potential entry point because it is overcome. It's on the path to making higher highs because that is our trend. This broke the sideways trend because the way that I'm going to define a trend is a series of higher highs and higher lows. So until this moment, it was failing to make a higher high, but it made a higher high. So now that is indicative of an upwards trend. This is a breakout. That is just the first indication. When this happens, I absolutely have some rules to verify this and look at it and make sure that it's valid. And we'll move on to that. But this is where you can do a couple things. I saw that there was a question there about, do I sell credit spreads? When does that happen? We were saying directional earlier because we see the magnitude of it, right? Or we had a clear stopping and direction point. if this is a breakout above, and maybe I think that it's going to have a hard time keeping to go higher, that's where I need to know if I need gamma on my side. Am I largely directional? And normally, where is volatility? We can take a look at some real charts and go through that. But that's when you would sell credit spreads. Because remember, credit spreads are neutral to a directional bias. So at this point, if I was bullish on this security, thinking that it would hold this 87 resistance line that became new support, that would be a cash secured put or a bull put spread, because that strategy is going to be profitable as long as it stays above the strike price that I chose, which would be right at this resistance point, now new support at 87. So that's where that application would come in. But I also want to assess volatility and look at IV rank to see if that's the optimal environment and figure out premiums from there. So this is something that helps you figure out your direction and magnitude, but then we also still have to apply those best practices of optimal environments. All right. And then let's talk about Bollinger Bands, which we'll start with the moving average. There is a couple of ways to look at moving averages, and they are used in such a variety of ways. We'll pull up my charts in a moment and I'll show you how I use them, but it's another indication of trend, and we're also utilize them for support and resistance. So we'll start with the period. Normally when you have Bollinger Bands, they actually have a moving average inside of them. It's the default's a 20 period, and then you add standard deviations on top of that, which is what we'll do next. But a moving average can act as means of support and resistance, because a lot of technical analysis is mean reversion, right? So this is literally the average that we see it normalized to. When I'm looking at moving averages, first and foremost is understanding the trend. You look at the slope of the line and you look at where the stock is relative to the line. Is it above or below it? So on this line right here, this is clearly a bit of an upwards trend. It starts going downwards. Now it's going into a downwards trend. I'd see that right here, just by looking at the line. Now it's starting to smooth out, going upwards trend. So that's where we look at the slope of the line relative to the chart. Means of support and resistance. Oftentimes, you can see how this acted as support, and then it became resistance. Resistance broke through, became support. Became support, broke through, now resistance. So you can see how the pattern continues. And that's the way to utilize Bollinger Bands, or what is literally the first indicator I actually ever learned about 15 years ago. So always a fun one. But now adding on what you'll see when you put Bollinger Bands on your screen is these bands. And there's a couple ways that you can use this as well. So it's just 2 standard deviations is what these represent. So let's go back to that psychological aspect. And this can be used for kind of ending points and starting points once it crosses those moving averages, because if you think about that, this is a standard deviation. Standard deviation means just highest and lowest point within that period that you specify. So trade variation, price action, right? So just using the default settings is what's on this presentation. So 20 period, 2 standard deviations, acts for means of support and resistance. That is the most common way that it's utilized. The way that I learned it and the way that I prefer it, because I use weekly charts and longer time frames, is trend strength. So yes, this is absolutely a stopping point because it reached the highest point of its standard deviation. But when it deviates away, pun completely intended, from the outer bands, going to that mean reversion, that to me means the strength of the trend is depleting. Because if you think about that, you've got a range of prices and it's constantly sticking to the lower end or the higher end, and it's deviating away from that, that means a change is coming. And that's what I primarily use Bollinger Bands for, is a directional and trend view. So very, very more clear here, but clear here as well. You see how when it hugs the bands, it's on the upwards part of the band. That is indication of trend strength. When that starts deviating, then all of a sudden we're ready for a downturn. And that's what happened with the NASDAQ 100 when was with Jim back in July. That was what I called out. Said, hey, I'm worried about this because this is deviating. This is not the Nasdaq 100, but it looks just like this. It's deviating. That's indications if my moving averages didn't hold that it was going to go down, and in which case it did. And that was the first sign, but in which case we of course need to assess and look at our other indicators in order to verify and validate, and then have our clear areas of support and resistance. And we can draw all in this chart to come up with that. I know, actually I'll do that on a real chart. And I'll show you my indicators that I have up. We've got one more slide and then we'll just go to real charts. All right, and then last and certainly not least, but yes, that is 20 periods and 2 standard deviations, is leading indicators. MACD, RSI, and stochastics are very popular indicators for that. They're utilized in so many different ways. So MACD, for example, moving average convergence divergence, uses an exponential moving average. We were talking about a simple moving average, which is just an even distribution of all the prices within that period. An exponential moving average isn't an equal distribution. It places more weight on current prices, the prices that just happened, which means that it acts as a leading indicator. Logic again, when you understand the math. So there are a couple ways that it's utilized, is crossovers and are bullish, cross downs are bearish, and then we can utilize them to spot trend reversals, which we'll bring up when I bring up charting and an actual platform. So this is kind of an intro to how everything works. I feel like I really flew through that, which I tend to do. But let's have some practical application and bring up some stocks. We can start with the S&P 500. Anybody have a specific security they want to bring up while I pause my screen and bring up my charting platform? So many. Oh my. All right. Well, that will be fun. Okay. Well, that will be. There are hundreds in here. Okay. And where did I put my chart? You guys are still going. I love it. All right, now I have to open a new one. I can't find it, which worries me because that means it's taking up some bandwidth on my computer somewhere. Zoom again. All right, can you see my screen? I am going to use stock charts. Great. All right. So this is just the default that I have of NDX. We could start here and apply some of the basic concepts that we talked about. So first and foremost, supply and demand in areas of support and resistance. There was a question earlier that said, if it's starting, where do you draw your lines to figure out if there's areas of supply and demand or support and resistances? And in this downtrend, for example, it's the higher highs, so the peaks. And this is my default preference, and this is a personal preference, and that is a lot of technical analysis is based on personal preferences, is I do prefer a 2-year time frame minimum, and I look at weekly charts. We'll drill into the day, absolutely, sometimes the hour, but mainly I always start here. The way that you start this is you'd even draw one here, is the new higher high and the failure. This was a higher high before this line was drawn before this happened. It happened when there was a failure. then that becomes your support and resistance. And you can see how this happens, right? And that it became our resistance and our very, very strong resistance zone way back in July 24th, July 31st area. Same thing here. So this is first and foremost the trend that I see. This trend began falling downwards because it failed to make a higher high. This would be my serious support line that matches up with this one. As soon as it begins making lower lows and lower highs, that's the definition of a downtrend. So lower high, lower high, lower high, lower low, lower low. Then lower low as in October, as soon as we overcome that area, which is here, that's why this is very strong, could arguably say another here, then this gives us an indication that we're back into that upwards momentum. And there's other things that we can add to that. But what's important with these, and then gaps are also important. We want to fill the gap. If anything gaps up or gaps down, then that also becomes a stronger area of support and resistance, hence here. So that's the way that I would draw these lines to become your areas of support and resistance or supply and demand. And I want to take you back to the psychological aspect of all of that. So this area or this area here, what that means is when there is this consistent movement, or you can even see it better on the S&P 100, is same concept. Let me take away these guys. If there is just this consistent, sorry, I'm trying to get it in the right area. This is the strong zone, or this is the strong zone, meaning think about the psychological aspect. If arguably this line goes all the way back here. If you bought here and you bought here, 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 or here, if it rallies back up to here, you might say, you know what? I'm going to go ahead and sell because I broke even. That's the psychological aspect. That's why it's an area of supply, because there's literally a lot of people who own stock. That's literally it. So then you want to see if there are more buyers than sellers at that point. Is valuations good enough? Which we're looking at the technical aspects, so we don't necessarily consider that. Now with the S&P 500 specifically, or the moving averages, we can move on to that. I use personally 26, 40, and the 13. If you've followed me, you understand why. If not, I'm happy to explain. The market looks, and this again is a personal preference that I've learned elsewhere. The market is quarterly, right? We look at the market from earnings to earnings. And the thought of it is 13 represents 1 quarter of price action. 26 weeks is 2 quarters, and 40 is 3. So that means as earnings are quarter to quarter, I want to make sure the price of the stock is rising quarter to quarter. And that's the indication of those averages. And again, you look at the slope of the line and then where the stock is relative to that line. So as they start sloping downwards, and someone said earlier, a larger time frame means a smoother line, or you're looking through the trees, they say. The same thing happens when you use smaller moving averages in addition to longer ones. You'll normally see the smaller ones turn first before the longer, and that's where this is coming into play. And you'll see that here. This began to just flip down. This was turning sideways, broke through, downwards trend, great indication. Strength of the trend here, failed. Strength of the trend here, failed. Now we want to make sure that this is supported. This is the ultimate. Otherwise, we are no longer making higher highs, would move right back into lower highs. So that's why this level is very, very important. Okay, so I didn't bring up any other indicators that we talked about. Didn't bring up MACD. If we want to talk about that, we can. But I will pick a stock and go through that. There's a lot of XOM, a lot of Tesla, Microsoft, Google, QQQ. I'd say we definitely did that already. QQQ, Apple, Meta. Let's do XOM. There's a lot of that in there. All right. Well, this is a very clear uptrend. That's first and foremost. And hopefully we'd see that with our areas of higher lows and higher highs. But now we have a failure to make higher highs, which is interesting. I mean, it makes sense. We think about what happened to oil today, right? But there still is little areas of higher lows. So what I'd be looking for here is I see the moving averages starting to smooth. So now it's in that trading range. Is it going to break above or below? So from a trade, this is what I call a testing point right now. Because again, Dow theory, area of consolidation means that there's going to be a reversal of some sort, or it may go higher, but it's normalizing. And I failed to say this earlier when we talked about the Bollinger Bands. Normally, since these are two standard deviations and there is a trend reversal or normalizing, I also look at the way that they tighten and they widen. So if they're tightening, then that's an indication of that normalization. But as soon as they widen, that is volatility and indication of like downwards movement, as you would see with volatility. So that is important to know when looking at Bollinger Bands, which is a lagging indicator of tightening and expanding of the deviations. It just tells you about the certainty, I suppose, of the trade. But let's add MACD to this. This is one where I'd add MACD and even the cloud. Moving average, go. And even a daily chart to drill into this. All right, so the trend reversals I think is important to talk about, or the validation of your trend, which can be utilized with MACD. So first and foremost, crossovers. So when this solid line crosses above, that's an indication of a bullish trend. That happened right here, short little bullish rally. This is a longer term time frame. Sometimes I'd even do this on the monthly level because that holds a lot of conviction. But I look at this to validate the trend, meaning with the MACDs making a higher high, so is the stock. That means that that trend has some good strength. The inverse happens, then normally that's an indication of a reversal, or the word is escaping me right now, but it is a reversal. So meaning right now, we look at the peaks and the troughs of the chart and MACD. The stock, this is still a higher high, ever so slightly, still consolidating, but it is a slight higher high. However, MACD is not making a higher high. And that actually, there's the word, is bearish divergence right there. So I actually would consider being bearish on this right now because of purely what the trend is telling me. Telling me that there was weakness. It did find some support right here on the, it broke the 13, but it's definitely, if it doesn't hold this, and this is pointing downwards, as soon as that crosses over, then that would be my indication for a selling point right there. Did that make sense? I hope that made sense. So bearish divergence because the trend is confirmed with MACD as MACD makes higher highs. And if it does anything otherwise, so as the MACD is making lower lows while the stock is making higher highs, then that means a trend reversal is coming. And that's exactly what this is. This is bearish divergence. That's abundantly clear. We can throw on some other layers and look at the cloud and other things to validate that. Also would probably find support right here. So I would watch this level, and if this crossed over, then I would be very bearish on it. It's too close to that support for me to place a trade on it personally. Do we want to do another stock, or are there any other indicators? How would we use RSI? We can add that. Try. And then I'll take off MACD. So RSI, you also want to look for that to confirm the trend. Why don't we pull on a different stock? Everyone's looking at Tesla. Oh, Tesla. So Tesla flattening, clear resistance area right here at 300. We can even start and draw it all out. Let's hide this and this. And can do that. So I used the extended trend line and I would draw it. That really is here. And I do not like solid lines. I don't know why. That's just a personal preference. So that's my area of resistance. So is this, as is this. I think I have a pre-made one of this already somewhere. But you see the failures of making higher highs or lower lows is exactly where the support and resistances are. And as far as how many indicators you should use, it is literally a personal preference. This is my personal preference that I'm sharing with you. And I'll also show you how OptionsPlay does it. It makes it super easy, is it utilizes all these things just to give you red or yellow colors because of the way that the trend shifts, the way that I was talking about the 13, 26, and 40. But with Tesla is and utilizing RSI. So same thing, I want to see it confirm the trend. This is a lower low. The RSI is doing the exact same thing. So that's good to know. That means that trend is in motion there. I want to just see this make a higher high and move to about here. And it's above this is turning upwards. So that's a good sign. So that's indication of bullish momentum to about there. And then we could add on our Bollinger Bands. Let's add that. Again, trend strength and then mean reversion. So it's tightening, which is areas of consolidation. So we're looking for that. It's just coming up to a really strong resistance zone. Tesla, I think, is a difficult one to trade because of the magnitude of it. And you've also got to check on what Elon Musk is doing, because if he just sells stock, it sends it downwards. And then I'd add on probably MACD2 to it this one, because I'd want to see an AMA. All right. So hopefully that added some clarification to a process of technical analysis. Essentially, you even see that here, there are so many indicators. There are so many. And you will find a process that works for you. And essentially that's what's important. But some are flags. So for example, knowing that Bollinger Bands help, but is a flag for further investigation is extremely important. That's very valuable to know. And what you want to look for is harmony. If everything is indicating upwards momentum or downwards momentum, or where your starting and stopping points are, then that is a good indication and gives you more conviction. Yes, sometimes we use volume as well, because higher volume is confirmation. And where the events come in is you're looking for a catalyst of some sort. So I have, I don't think I have it built up, or I might use the messiness that is in here. Think this one down. Maybe, yeah. So here, I haven't done it since Q4, but these are the catalysts. So this was earnings, this was earnings, this was earnings. That's where those events come in, is this as in start of the season, to give you an indication of how it goes through its other it could be the momentum that's needed. And that's what's important to utilize with events that come into analysis, is you might see a clear resistance point. And in order to get above that resistance point, you need a catalyst of some sort. And that catalyst could be earnings that is going to bring in new pricing information. And so that's where you can marry analyst expectations with that process. Let me bring up OptionsPlay as well, so I can show you that view. And I apologize, I didn't use the charting platform in there, because we certainly can. And I'll show you how that's utilized. And we want, all right. So this is what I mean about how it's made easy. This is a proprietary indicator right here. And it's an indication of the 1 month trend and the 6 month trend. And what's helpful with this just like we were talking about the 13, 26, and 40, the shorter term time frame trends will turn first. That's your early indication. And when we're dealing with options, we also have an expiration date attached. So that's where this is helpful. And you'll notice that the 1 month trend, not always, as here, will turn prior to the long term. And so that's indication that perhaps something is coming. It's got SPY up. It's saying that the 1 month trend is exceedingly bearish, or the 6 month trend is in that neutral territory, right? Whereas here, it didn't come to fruition. So that's why it's also important to know the catalyst to the question that was there earlier, because the earnings season is literally kicking off next week. And that is a catalyst that could absolutely shift the sentiment of the overall market. So that's certainly important to know, especially when you see this. But 1 month is an indication of, yeah, that the shorter time frame absolutely looking bearish. So that helps you determine your expiration dates as well. Also, you might notice on the OptionsPlay platform is these green bars and red bars. Sometimes they're yellow. That's just a indication of the 6 month trend as well. So whenever you're scrolling through, so this first widget here is intended for your ideas. You can put a watch list there. If you are ever watching in the money, our trades are in there as well. You can find that all here. So it's ideas from daily plays or anywhere that Tony and I have appeared for the most part. And if it's in a bullish or a bearish trend, you'll see that, and the strength of the trend. That is just another way of viewing the indicators that we talked about. Then you validate it here. So we're looking at SPY. Says 1 month is bearish, 6 month is bearish. That's why it defaulted to bearish trades here with the best practices that we speak about quite often. So that's the way OptionsPlay takes that view on technical analysis. And when you log in, you'll see the sentiment and OptionsPlay technical analysis that Tony gives on Mondays to give you that view of the overall market. We utilize that in addition to the daily plays. And then of course this platform, because our whole mission here is to make everything as easy as possible. I personally love the technical analysis aspect, so I'll go a lot deeper into it and go into the math, but you don't have to do that. You just have to know the starting and stopping points, if some are signals or rather more conviction. But I'd say the most important thing with technical analysis is trend and identifying trend, uptrends or downtrends. All right, we hit 5:04, which I feel like it's only been 30 minutes. So if you have any questions, feel free to type them in. I'm glad you like the math part. I certainly do too. Okay, go backwards. What does the OptionsPlay score means? So this takes into account your cost and your reward and your probability of profit and your risk. Well, your risk is your cost. We've got a lot of rules that we specify whenever we talk about options trades, when you attend our sessions, when we talk about the option strategies and best practices. Those are based off of risk versus reward. So that's indicating that your risk versus reward is in a good place or a bad place. It turns green if it's over 100 and ranges to, I believe, 200. I've never seen it at 200. But if you see the OptionsPlay logo just pop up, it's green and it's over 100, then that means that risk versus reward is in your favor. Normally, it means I can make 3 times more than I spent. That's it. So that's what the OptionsPlay score means. It's evaluating the strategy you have selected. And you, of course, can adjust it and modify and go from there. The strength indicates the strength of the trend. So it's just a scale of 1 to 10. 1, not as strong, 10, super strong. So that's important to know. That's what this means. Any comments on seasonality and cycles? Is that technical analysis as well? Absolutely, because that is a study of patterns in events. And the market right now is so remarkably seasonable. It's seasonable. That's not a word. Seasonal. It's remarkable, meaning September is your worst month, right? And it was a very bad month last year. It was the previous 4 years, but then the Q4, there's lots of really great data on that. Right? You can pull it, has always remarkably been well the past 4 years based on those downturns. And I think that is so interesting. So seasonality absolutely comes into play. And my personal belief is it goes back into that psychological aspect that sell May and go away. A lot of people exit the market. September timeframe, you're coming back to school, so maybe you forgot and you get out then. And there's even a different layer you can add with presidential cycles that make a difference. And again, that's because with fiscal policy affects the stock market. So if you have depending on where we are in the presidential cycle, which we're in a mid-year, so there's definitely lots of data on that. Sometimes you don't want good or bad things because you want to get reelected, and you have to take that into account from that type of cycle perspective. And then Santa Claus rally, because the market is literally just means stocks going up in value, which is reflected by earnings. So if people are spending a lot, that also would indicate consumer health. That's why we always get the Santa Claus rally in December. So yes, there is so much that has to do with the symbology. Or yes. All right. OptionsPlay symbol beside the ticker in a technical ideas list denote that it is a particularly good idea. It probably falls also on a list of some sort. So there are lots of predefined screens in here. So this pulls every optionable stock and ETF, but there is way more than 41 of these, way more. So it filters ideas based on technical indications to be your starting point. And then we click on this to validate if our sentiment, our view, and then trade from there. That's the way that the OptionsPlay system is built. Okay, let me see if there is any other questions in here. A lot of questions on portfolio. That's our feedback wise. I'll make sure I bring that back. And I see somebody answered Sorty's question. Thank you for that. Gary has a wonderful question. I've tried selling credit spreads the day before earnings to take advantage of volatility, but I keep getting it signed. Well, you'll certainly get the volatility crush, but if it moves adversely, it probably moves adversely quite a bit, in which case you would most likely get early assigned because extrinsic value is completely depleted. And we'll talk about that when we talk about exercise and assignment, but your probability of assignment is very, very high if there's no extrinsic value. That's the good rule of thumb to look at. So if you're trading earnings, sometimes just build in a cushion. And yes, I use weekly charts. All right. I think we answered most of those. The other ones are in portfolio. Okay. All right, we answered most of those. So we'll leave it there. I hope you guys enjoyed today's session. More questions, or if you have one that I didn't get to that you really wanted, email info@optionsplay.com. You can also sign up for a free trial at OptionsPlay, play with the tools and resources, tell us what you like and what you don't like. Next week, Tony is going to come in and he's going to talk about trading earnings with options. As we kick off earnings season, it's important to cover. So that's what will happen next week. And then I'll come in the following week and I'm actually covering strategies that you guys asked for last time. Somebody asked for doing the poor man's covered call. So I'm going to make sure that we cover that. And then we're also going to talk about very popular hedging strategies, that popular hedge fund strategy that we also saw you ask for. So this whole month is literally, that's why the navigating the markets was all about strategies and requests from our community. So please keep those coming. You will get access to this recording as long as you'd signed up for it. Will come in your email. I believe that one is members only for the slides. But if you have questions, again, info@optionsplay.com. Thank you for the very kind words. And I hope everyone has a wonderful evening.